You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster Joe Venazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody, that rockin' bit of tunage means it is time to rock out with everyone's favorite. I know it's my favorite. Hopefully it is your favorite. And I'm not just saying that because I'm on it. Bi-weekly options show. My name is Mark Longo from the old Options Insider. I should say, I said the old. It's really the brand spanking new. Go check it out. All sorts of new stuff coming on there all the time, including updated and easier, I should say, to access contact form. You guys like to use the website and kind of got moved around in the new design. It's there. It's easy for you to hit us up, fill out those fields with your questions, your comments, your insights, all that good stuff. So the website back, an easy option once again for you guys to send us your questions. Of course, if you listen live every Monday and Thursday, you can hit the live chat or the old social medias. Many different ways for you to get at us. Just make sure you send those questions because we do love to hear from you guys. And joining me on the program today, let's see who we got joining me on the old all-star panel today. Let's first start off. Let's go out because he was kind enough to send me, to show me the idyllic surroundings that he's living in these days. Let's start with the Rock Lobsters. Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the show, sir.
Scratchy Face Lobster is on board. He is here. He is wondering what is going on with this Fed and this and that, and my gosh, it's so confusing. I can't even see straight. Lots to talk about.
That's a regular day for you, though.
Well, yeah, you got a point there.
All right, and also joining us from, I don't know where he's beaming in. Let's find out. He hasn't been in the old Fidelity hot seat in a while. We are joined once again by Mr. Brian Isabelle from the Active Trader Strategy Desk over there at Fidelity. Mr. Brian, welcome back to the program. Where are you beaming in from today, sir?
Good afternoon, everybody. I am beaming in from Merrimack, New Hampshire. the options hotspot of the universe.
You say that, but you're the second guest from New Hampshire in a couple of days. So there you go. New Hampshire lighting up. You better watch out, Mr. Rock Lobster. I think between him and some of the other Fidelity guys up there, and then, of course, Matt and his ORATS crew, I think New Hampshire might start to rival Maine. What do you think about that, sir, as a top Google search destination for options in the country, let alone New England?
I think, he, of course, has the entire behemoth of Fidelity behind him, and I am just a humble rock lobster. So I will take on the Google search challenge of myself versus the entire Fidelity organization in the Northeast.
The rock lobster versus the world. I don't know. Matt and his team, they use a lot of data over there. They're doing a lot of searches, so I don't know. You may be in for a tough fight there. So we'll have to do. We haven't checked in on the standings in a while. It's probably been about a year. I'll have to check in and see if Maine still owns the top Google Trends search category for options. You know what area doesn't own it, but still loves themselves a little bit of options, at least when you go to St. Charles Wealth Management. It is, of course, St. Charles, where we are joined by Uncle Mike TOSAW from the appropriately named St. Charles Wealth Management. Uncle Mike, welcome back to the program. We got to get St. Charles higher up there on the Google search rankings for options as well, sir.
Why do we need it? You can just come to my office.
That's true, and they could also have delicious Skippy Zeros and lemonade, so it's a win-win all around.
What more do you possibly need? No, happy to be here as always. Always very excited. We'll see what we can do to up the Google searches for options. We want to do our part.
One day I will cash a check from Skippy Zeros and Lemonade. Mark my words. All the free plugs I've given them over the years, sending people to their obscure locations in and around St. Charles. But darn it, if it wasn't tasty, delicious lemonade and a pretty darn good gyro as well. Even though I live steps from Greektown, so I can get all the euros I want. But I digress. Let's keep rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. You guys know the drill. It's time to talk about what the heck is trading out there. Let's find out. It's one of those weird weeks. Everyone was waiting with bated breath for the Fed to announce their decision. Most people were thinking 25 basis points. Some of the hardcores were thinking 50 basis points. The Fed watch was swinging back and forth till a couple of weeks ago, till Powell's testimony. 50 basis points wasn't even on the radar. It was 98% pricing in 25 basis points. Once Powell spoke, all of a sudden, pretty strong uptick. North of 25% all of a sudden getting out there to 50 basis points. We didn't see that, obviously. We saw 25 basis points. We also saw maybe throwing a little bit of cold water on some of the market's expectations for future easing, and that combo was enough to spook everybody yesterday. Market selling off pretty much 1% across the board. But our first rate cut in over 10 years since the dark days of the financial Armageddon that was the financial crisis. So interesting when you put it in those historical perspective. But that wasn't enough to ameliorate the market. Everyone was spooked yesterday. 1% sell off across the board. Today, it's like that never happened. It's like we're back in green territory again. Everything is up pretty much 1% or pretty darn close. Tech-heavy NASDAQ leading the charge. The upside up nearly 1.5%. And S&P up almost 1%, 0.95% coming to showtime here. Dow up almost exactly the same percent, and that means VIX cash taking a bit of a break after spiking a little bit, getting up to, almost 15.5, 1544 yesterday, coming off those highs now, right around 14, off about 2 handles and change out there. So it's been an interesting day. Couple of days actually out here to watch since our last show. A lot to unpack. Let's go back. He hasn't been on the show in a while, so let's start out there in the land of the hot seat, also known as the new options mecca of the world, a.k.a. New Hampshire. Brian, what's been on your radar? What are the Fidelity folks slinging over there in these surprisingly active middays of summer here?
Yeah, it's actually been pretty interesting as far as times, but not only that, but a lot of activity for the dog days of summer. But the same names we see quite frequently: Apple, AMD, Amazon, Microsoft. They're in the top traded by Fidelity customers list as usual. One interesting thing that I came across today is Beyond Meat being traded a lot by Fidelity customers as far as stocks and options go. From the stock side, it's actually the top symbol being traded by Fidelity customers today, with buys outdoing sells 60 to 40%.
It's the top symbol at Fidelity, beyond me. That's amazing. If you had even said those words out loud like a couple of months ago, people would have laughed at you, right? You got so many things. You got SPY, you got everything else over there, and Beyond Meat is the top ticker at Fidelity. Right? That's amazing.
It is. It really is. Yeah, but, it's been in the news, been the big thing. It's they had a secondary share offering, came out today. It was priced at $160. When the stock itself was trading down about 9% to $178, one of their big competitors just got an FDA approval for a quote-unquote bleeding plant-based burger, which sounds a lot like something very scary to me. But either way, that seems to be weighing on the stock, and the options are trading super actively as well. They're about almost 2 times their 90-day average volume and open interest. So big one leading the charge there today. One other interesting one, just because I hadn't heard this name in a while, was Shopify being traded, the stock quite a bit. It's up 9% after earnings. Once again, 2+ times the volume for the option contracts in that particular name. So a couple of interesting standouts there.
I'm still wrapping my head around the fact that Beyond is blowing the doors off everything else at Fidelity today. It's crazy. That just shows the demand, not just for the product, but for the stock and everything. The thing swings so much. Today, it's off a paltry 22, almost 23 handles, or about 12%. It's down shy of the 200, the 173. Wasn't it just 210 a couple of days ago? This thing just moves like crazy. And I'm with you. It sounds gross, the bleeding burger, but I'm not sure if you have cooked these Beyond, but I've actually grilled some of them. And, that little bit of the red and the little bit of drizzling that does when you cook it, it does add to the overall meat sensation. It smells like, it sounds like, it feels like you're grilling actual meat. So since I am the target audience for these things, I'm a carnivore who's reluctant to go over to the dark side of vegetarian eating. These types of products are clearly designed to appeal to me, and they're working. And if they have one that bleeds more, it sounds gross, but I think in the parlance of that industry, that's actually a big deal. I know Possible is talking for a while. I think they're on like version 2.0 now. They keep saying version 3.0 is going to be good enough to be a steak substitute. Right now, you kind of have to take these burgers. They're really good, but you got to put them on a bun. You got to put ice up on them, condiments. Then you think you're eating meat. They're saying version 3.0 will be a standalone. You eat it at a restaurant like you do. You go to Gibson's here, you get a steak. You can go get an Impossible steak. So we'll see. That'll be the line of demarcation that we'll all be waiting for them to cross with very, very great interest. All right, let's keep on rolling. Mr. Uncle Mike, are you excited by these new bleeding burgers? And what else is on your radar today, sir?
Can't say I'm very excited about the bleeding burgers. Definitely a neat thing. I mean, you got to keep with the times. And even in America, we can go to replace our cheeseburgers. Things like that happen here. With what I'm looking at, I think it's interesting what's going on with the Fed right now in that we've said this on the show before. The Fed is in theory not a political organization, but magically they lower rates as soon as Trump starts complaining about it. So I really believe that Powell was pressured a lot from the president to lower rates, as well as not only him, but from in general, because rising interest rates, I mean, I've been around a long time, and I don't really remember any time where an environment of rising interest rates has really sparked the economy, quite honestly. So a lot of people, it sounds like, by consensus, think that he went too far with the raising rates. But it seems like he's just trying to make up for raising rates a little bit. But in reality, our economy is still not doing that bad. So I think that as an overall person who's going to live in America the rest of his life, I don't think it's going to be long-term good if we go to continue to lower rates. But in the meantime, it's 25 bips, so not a big deal. But if this trend continues and we go back down to the levels where we were a few years back, I would not be a fan of that. So I'm just kind of hoping that he stops soon. So a lot going on today. The other thing that happened earlier this week, we had Apple earnings. Beloved Apple is knocking on the door of 220 again, so we have that to look at. Also earlier, we did have Google earnings. Google's looking pretty nice. We also have news with Facebook. So with Facebook, not today, but earlier in the week, it looks like things are going to be not quite so bad for Facebook. And A lot happening, combined with the fact that we still have this trade war thing going on. The other interesting thing that I noticed from Powell's testimony is that he actually did mention the trade war as we're doing this. And so a lot of interesting things, but the bottom line is that we're still caught around that 3,000 mark, the SPX. So that is what's lighting up my tape.
You mentioned your beloved fruit company, sir, that did indeed report earlier this week. Hopefully you checked out the earnings move report we have over there on theoptionsinsider.com. You could have seen all the fun straddle juice playing out over there for yourself. Looking at the numbers here, everyone likes to parse the Apple numbers. $210 billion, that's how much they're sitting on in cash right now. That may sound like a ton, and it is. That's a large amount of money, but it's actually 6% lower than it was last quarter. So they've been spending a wee bit of that cash, probably trying to grow that services business that everyone is so obsessed with. You break down the numbers of their quarterly revenue. People like to do this. They parse it by different categories. iPhone, almost half, 48% of the revenue. iPad, a paltry 9%. iPad's been falling for a long time. The Mac, 11%, so right in there. You know, it's in the name. It's kind of was the core of the business. Now a paltry 11%. The wearables and home and et cetera is 10%. And then services, 21%. That's the number everyone's watching and waiting. They're trying to transition into this services company. And I guess if you're sitting on $200+ billion in the bank, you can kind of acquire some services. And that seems to be what they're doing. Of course, they built out things like Apple Music and a few others. And now they're talking about this forthcoming Netflix competitor that they have there. So a lot of things going on over there. But yeah, that services number is what everyone's looking at, and 21% right now of their revenue. So that's their goal. Maybe that's why noted designer Johnny Ive left. They're not really in the hardware business anymore. They want to start transitioning to the services realm. Either way, they still make a lot of money from hardware, so kind of hard to say that's behind them. But interesting to see what the future is showing out there. Apple today right now, $216.90, up nearly $4. So it's feeling the love. The rest of this market is right now up nearly 2%. I'm just looking over here really quickly to see if I see any notable crazy trades up here. Looks like maybe some verticals here, 220, 225, which is about not that far out of the money actually. So interesting. That's the top trade going on out here in Apple land today. All right, let's keep on rolling here. Let's go out to the land of Maine. Mr. Rock Lobster, sir, what is lighting up the tape out there in the mainland, sir? Soon to be the number 2 option search destination behind the Mecca of New Hampshire.
You're already throwing me under the bus. You're already, you're putting me behind.
Got to get your umbrage
already.
You got to get your umbrage in where you can on this show, sir. I've learned that the hard way.
So a couple of things on the Fed, right? So as you probably recall, Longo, 90s, I think TOSAW might have been running over running backs or something like that back the way that. But, the Fed has lowered when they need to kind of make everybody feel good. Like, you remember the Russian debt crisis and all of the, all the BRICS, third world, all that kind of stuff. They lowered rates then. They gave it a little pop, just because the market tends to be a little myopic. So they're like, the sky is falling, sell. And they never stop until the Fed goes, hey, we're still here. I think all financial panics in general are liquidity crises because, the money going through the economy is like blood pumping through somebody's body. And like TARP, right? The Fed made money on TARP. People forget that. I think even the big spending package back then, like you think about it, you need people to have confidence. You need banks to keep lending. You need people to want to show up every day and do their normal thing. I think that is the hidden Fed mandate, right? Because the Great Depression, all the big financial depressions we've had through history have generally been liquidity crises, meaning banks that nobody wants to loan. They're like, screw it, we're not loaning anybody. Everything is too murky. So I think nobody says this enough, but the Fed's job is to provide like that little bit of, hey, we're here and we'll lend if we need to. That's my impression of the Fed after watching it for 30 years. So right now the Fed is saying, okay, this Chinese war thing, it's a big deal. People care about it. It could be bad for farmers. Usually stuff bad for farmers is bad for everybody. could be bad for our export. Like it's disruptive, right? So I don't know how it's going to end up. You can disagree with the policy or not. Either way, the Fed's like, it's disruptive. So we are going to lower. Another thing too, so it's not totally without precedent. And another thing is the entire world is going insane lowering rates. The U.S. was actually unwinding its balance sheet, ratcheting rates back up, actually being like a responsible country where charging people for money and trying to get some sort of handle on their monetary and fiscal policy. All of a sudden, it feels like this week, like the debt thing went totally out the window. Nobody cares about spending anymore, and they're not going to do any of this. So, I agree with TOSAW. I don't think it's a long-term good thing for everybody just to decide it doesn't matter anymore, even though it might only be for a short period of time. So while the market likes it, the news likes it, the SPY and SPX over 3,000 like it, I don't think historically it's good. Because at some point you have to pay. If there's enough economic growth, you don't have to pay. So, and I think the market's always looking at that. So, as of right now, they cut. Europe, Japan, name your G7 country. Do you really want to pay Italy to to loan them money? I mean, you think about all this stuff, and it's total madness. However, that's the current world we live in. On the second half part is interest rates in the 2-3% range for a lot of the 20th century were the norm, except until after the oil crisis and we got off the gold standard. But lower interest rates were actually kind of normal. We don't have inflation. And that's another thing. There's really not a lot of inflation. Why not? Technology. I think technology has been one of the killers of inflation. I mean, think of all the stuff you can do with computers, iPhones, and stuff like that. It's crazy. So parts of the economy, things are getting more expensive, but your ability to do other things are getting cheaper. So there's a lot going on. It's never just all black and white. But as of right now, there's still some confidence that, these guys are going to try to figure out the monetary policy thing and get it right. I don't know. That remains to be seen on all of that stuff. I certainly don't want to see another rate cut unless the China thing really becomes a problem. As in, these tariffs are going to go on for a long time, and businesses actually have to start making ugly decisions, right? Like, we're getting out of China. We're going to stop dealing with these guys. The Chinese are like, screw it. We're not going to deal with the U.S. Like that. If that kind of stuff starts to happen, then it kind of feels like it's like Smoot Hawleyville again, where everybody just kind of pulls back. And and that we all know that wasn't very good either. So at some point, we're looking for a solution to the trade war thing. The sooner, the better. I think that would be the biggest news. I would expect the rate cut to go right back up again, and it would give Powell a little bit of ammo in his gun to, cannon to say, okay, whatever, President Trump, we don't need rates that low. But listen, if you want to buy government paper, the U.S. is going to pay you 2%. So where else? So anyway, that's what I think right now. But VIX as far as the lows of last week, we're still not there. So there's still a little bit of, let's just call it, there's a little trepidation in the market. We're back to the 13 handle, but we're not in zone one yet. So I can't make the call of the all is clear zone has not been reached.
Not quite there. Not quite back in the zone of the monk yet. Again, we're still got a little.
Not in the zone of the monk, because I was killing me trying to remember that.
The zone of the monk. Interesting pop-up up there in the vol space last few days. And, of course, in products like VXX, this gets back to what we were talking about on the show last Friday on vol views. You got to have a little something in your back pocket in case these little blips, and this one seems to be coming back already, but still these little blips do happen, in which case you need to have something in your back pocket. Let's see what the market has in their back pocket today. We heard the breakdown of Fidelity Beyond Meat driving the tape over there. Let's see what the rest of the market has going on. Coming into showtime, it was a fairly decent volume day, all things considered. VIX was on fire yet again, looking at our old friend there, the whale 50-cent call. I was talking to people about this yesterday, about what kind of flow is actually going up out there, and it actually is clearly not just one of our friends out there anymore. He or she has inspired a few others to come to play as well, because there's a lot going on out there. We talked about on the show last week as well, of course. There were not just the 50-cent call buyers, but there were flies and all sorts of weird stuff going up for size last week. So someone came out for size, and it seemed like it awakened everyone else in the vol space, because they're slinging pretty hot and heavy. Actually, coming to Showtime was about 550,000 contracts on the tape. Now is 675,000 contracts on the tape out there in VIX land coming into midway through the show here. So active day, the ADV is well south of that. It's 488,000, and that's well north of where it was a few weeks ago, a few days ago. It was about 420,000 contracts. So VIX on fire of late, and talking too about a little bit of churning and burning. Those guys coming in, those 50 centers coming in, picking them up, then dumping them the next couple of days or so. A lot of back and forth churn. It's not just straight up size positioning like we saw with the old whale guy a year ago or so. Different paper flow out there, which is kind of interesting. SPY coming at Showtime was at about 1.3 million. The ADV a little bit north of 2. SPX a little bit north of a million, about 1.1 million coming into the show. ADV about 1.2. So we're seeing a pretty active day out there in SPX as well. The Qs, about almost 400,000 on the tape coming into the show. ADV a little bit north of 500,000. And the Russell, a.k.a. IWM, at about $1.80 coming into Showtime. And the ADV is about 337,000 contracts out there. Let's see what the broad market was trading out as well, including the individual equity options. Let's start at number 10 with the Twitters. 95,000 Twitter in the top 10. You don't see that too often. 95,000 on the tape. Number 9 Amazon. 97,000. Number 8 Tesla, a rare bottom half of the top 10 appearance for Tesla. $1.13. Number 7 Qualcomm, $1.23. Number 6 Facebook, 142,000. Number 5 was the Schwab, I believe, $1.54 on the tape. Number 4 AMD, $1.95. Number 3 is good old Softy, $1.98 on the tape. Number 2, the aforementioned Beyond Meat. Can't be number 1 for the overall market, though. Maybe number 1 at Fidelity. Number 1 for the overall market, still Apple. $2.10 on the tape for Beyond. 376,000 coming into Showtime for Apple. So lighting it up yet again. Let's see. Let's look at if there's any interesting biases in any of this paper. It looks like the biggest bid in one direction towards the other is to the Facebook. 67% coming. Actually, I take that back. Twitter, lighter volume, but 83% of it coming on the call side of the ledger, ladies and gentle folks. All right. We have some earnings popping off this week. Again, check them out. TheOptionsInsider.com is the place to go. Click on the top right tab there. It says Options, News, and Articles. You'll see all the breakdowns. You'll see the most actives. You'll see the earnings move and earnings move results reports. So you can find it all there. This week is a pretty active week. We mentioned Beyond Meat Array. They were on Monday after the bell. Tuesday, of course, was Apple, EA, and Sony. Wednesday was GE. And our old friend CME across the river there, reporting some numbers. They'll be up again in about an hour on Twyphone a little bit, seeing what they saw for the quarter maybe. Day 4, also known as Thursday, GM and Pinterest after the bell today. And rounding out the week here, we've got Exxon and Chevron here. So an interesting week here, all things considered. Again, the reports are up there on the site. Let's see. Apple was pricing in about 5% coming into their announcement, so interesting to see what they've delivered coming into Showtime now. They're pretty much, looks like they were at about 207 at the time of this report, and I just had it up, and of course I do not hear. There it is, 214. So they're up about 7 handles from that report. So they have exceeded their straddle here in the couple of days since. All right, check out all those earnings move results reports for yourself. TheOptionsInsider.com. Meanwhile, we got to keep on rolling right on into.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody, let's do it. Let's kick things off. Let's get the party started. And a name we've been talking about a little bit of late. Not usually a hot name, sub $5 or sub $6 name here. Certainly well below $10, which is line of demarcation a lot of people like to draw where they would maybe stop considering using options on a stock. But GoPro now, well shy of that at about 5.25 coming into today's show. So roughly unched on the day. Not a huge underlying move here for GoPro today. Ticker symbol, of course, GPRO. This is, of course, kind of the marquee name in that action cam space that was super hot for a little while, and then it seems to have cooled off markedly. A year ago, they were trading about not quite $1 north of where they are, but pretty close. They were trading about $6.12. It's at about $5.27 today, so a decent premium. But then they rallied up pretty quickly after them. They got up shortly after that, and so first week of August, they were trading $7.05. So they rallied pretty strong. Obviously, earnings time last year up into $7. They hovered around there for a while, and then in October they sold off again down to about $6, and they kept selling off in November, down all the way down to the nadir of Christmas Eve, which was $4.04 for this name. The actual 52-week low, they actually touched $4 before bouncing off of it. So $4, 52-week low on this name, and they pretty much turned right around again after that. Within about a month or two, about the late February, they were trading $6.30 again, so they rallied 50% pretty much. And then they kind of hovered around there for a while, up and down, and they rallied again in May, up to 7.5. So it's been an interesting run for GoPro, and then ever since that 7.5 print in middle of May, they pretty much have never looked back. It's been straight down again, and here we are again, back down to 5.25 here. So interesting times, tumultuous, some might say turbulent times for GoPro in the action cam land. Let's see what came across our Eye of Sauron today. Let's see. We got Call Love. Go figure. Looks like it's the 6s. The AUG. I believe we've been talking about these before. I'll have to go dig up. We talked about GoPro recently. It might have been the AUG 6s again. I'll have to go check. But it was, we got 10,000 of the AUG 6s going up for the old 13 cents, as the Irish like to say. This is opening over there on the NASDAQ. These were pretty much 11 cents at 13, so gobbling up all the offer they can get. Worth noting, this is an earnings play and a pretty immediate one. They have earnings right after the bell today. So AUG 6 is 13 cents. These bad boys have a little bit of time to run, but not a ton. And this, Mr. Rocklouse, this is kind of refreshing. This is kind of like some old school odd block paper where you're coming in, it's the day of earnings, we're going to swing for the fences on some near-term out-of-the-money calls. Let's do it. Let's roll them bones. What do you think of this one, sir? Is it kind of refreshing for you as well? Old school call love?
Yeah, that's like circa 2013 odd block.
It is. The early days.
Way back. I mean, it's like anything, I think cheap options that are relatively close to the money are always interesting, as a speculative deal. And I just, I don't know what's going to drive GoPro. I know people love their products, but the company isn't as profitable as when they first came out of the gate. So, there's competition. But basically, I know that, like, if you're doing anything active, like my kids use the GoPro because I'm not going to let them use my phone, right? The last thing you want to do is see your phone at the bottom of a lake because that blows. The GoPro goes in the lake, you're like, whatever, I'll just go get another one. Even though,
But they aren't that cheap, though. I mean, the decent GoPro is like $400, right? It's not something. That's not something you're going to casually throw in the sewer and buy. I'm done with it. It's not like it's a $20 Instacam.
Pocket change to Andrew.
What was that?
I was going to say that's pocket change to
Yes,
Andrew.
that's true.
Yeah, but it's what I'm saying is if your phone breaks, though, you're like, oh damn, because how much stuff do you keep on your phone? That would just be a pain. Like, I do so much option pit business through the phone. So, but if the camera goes, you can live. So what I'm saying is GoPro does have a place. Now, is that place worth 13 cents on the August 6 calls on, I think this is what we would call back in the day rip-ups, I think. Here, let's see, we got GoPro, it's 5 and change. Our president just tweeted. We're actually, SPY is down on the day after being up almost 1%. For those scoring.
That's what happens when you hear a tweet come out, right? That's it. It's all bets are off.
That's basically what happens. So it's another good opportunity to dump some downside. But can GoPro move $1? It's possible, but I think that's a pretty big bridge. That's all I'm going to say. Somebody's going for it, though. Maybe they know something that we don't know. But that is an old swing for the fences. Outside it's $6. I'm going to say $6. Well, they're saying that $6 is within the realm of possibility that those options could be worth something. So maybe it's not as crazy, and this is the bottom for GoPro, and this is just one of those times where after the trade goes up Longo, we go, well, I guess that guy knew something.
That guy was a genius. He's of Men's Warehouse fame. He's a genius.
Exactly. When you're in that category, you're
yes. When you're talking Men's Warehouse money, that's a whole other level. I'm just looking here really quickly. I have Grubhub on this report. I don't have GoPro for the earnings move report. So listeners, you can check it out for yourself over there at theoptionsinsider.com. Go digging through it. I can tell you exactly what they're pricing in, but I don't have it here right now in front of me. Of course.
They're pricing like 80 or 90 cents, somewhere around there.
Around that level.
Pretty huge.
That's actually a pretty big gap. But I think we can both agree on this trade, regardless. It's effectively a binary option trade at this point, right? If this earnings doesn't hit tonight, these things are 3 cents at 4 coming out tomorrow, right? So this guy,
if they're lucky,
yeah, exactly. So this guy has it's pretty much a binary trade, yay or nay. Earnings go your way, or they don't. They got to go your way pretty hard, listeners, too, because even if it just kind of comes most of that way, it's still going to see a lot of that juice come out of those calls. So this guy needs to hit a home run. Here's what we'll do. We'll keep an eye on our friend, and we'll come back to him because we'll know by tomorrow if he's right, and we'll see how well he did. Because this one, you don't have to wait 3 months, 6 months, or a year to see how this trade fared, or if he's going to roll it or adjust it. Nope, we'll find out pretty quickly whether this guy is a happy camper or if he lost 13 cents 10,000 times. Let's go. Let's keep an eye on that one as we keep on rolling to our next name. This is Tencent Music Entertainment Group. This is an ADR. This is the Chinese music streaming company you may have heard of. Ticker symbol TME. Not quite time, but pretty close to it. Trading today, $14.08, off about 20 cents or about 1.3%. So let's see here. We've got this name. A year ago, it was trading almost exactly where it is right now, $14. And then it kind of sold off pretty quickly. You must have had earnings coming up. And I do believe it, after the close today. So they sold off right down to 12 almost instantly last year. And interesting stuff here on this chart, but it sold off right down to 12. And then it pretty much, right after the nadir, the dark day of Christmas Eve, popped back up to close to 14 again, and then kept rallying, got up to 16 almost in late January before selling off again down to about 13 and change. It kind of was all over the place. Then it rallied hard. By late February, it's trading almost 19, 18.75. It hit 19 in the middle of March, 19.11. The actual 52-week high on this name is about almost $20, 19.97, right around that March-April time frame. And then it kind of never really looked back again. It kind of started selling off again down to 17 and change in April, and then down to 16 in May, and by June 3rd, it was down to $12 and change again. So the high highs and the low lows here for Tencent, and we're kind of right around a little bit off those lows right now, 14 and change, actually 14 almost even, coming into the latter portion of the show here. Let's see what we saw out here. Given this recent move, not surprising, we're seeing, looks like a little bit of put love on the old tape here today. It's the AUG 14 put, so a lot of near-term stuff. Again, we have earnings popping off after the bell, so probably why people are playing pretty close to the vest here. AUG 14 puts going up for 60 cents. The market was 45 cents at 60. Looks like almost 10,000 times, 9,749 paper lift in the offer. Over there on the Philly, this was indeed opening, and we got earnings after the bell. So Mr. Rock Lobster, kind of a flipping of the script from what we just saw. We just saw a little bit of earnings call love, a little bit of swinging for the fences, a little bit of binary upside call action. This is kind of the opposite. This seems like earnings-related, shall we say it, put spookage. Maybe somebody a little bit spooked here that this thing's going to retrace down to the lows it saw recently around $12. Maybe someone just specking. Either way, it seems to be someone trading to the dark side on earnings. A little bit of a flip of the script, sir.
Definitely a flip of the script. And not and paying up. I thought Tencent was a Chinese internet type company. Now
it is. It's a Chinese company that develops music streaming services for the Chinese market.
Okay.
Yeah, have you not heard of Kugao and Kuo, their services?
Yes. So, and I think, worrisome type of paper. Tariffs. I think we just had another tariff tweet just came out. So when you look at stuff like that, you go, oh, wow. But again, what is that? The symbol's TEN, right, for Tencent?
TME.
Let's see here. $14. I mean, that is just an aggressive put purchase. And right now it looks correct, to be honest. So at least for right now, it's definitely looking very good as far as that goes.
Yeah, speaking of not looking good, you're right. This worm has turned pretty aggressively. We were talking about everything up almost 1%, right? Coming in, started the show. We're off 0.25% now, pretty much. So wiping out all the gains. And NASDAQ was up 1.5%. It is now unched to slightly down here. S&P and Dow off 0.25%. Man, I didn't see Trump's tweet, but I'm going to go out on a limb and say it probably wasn't good.
I think he's adding some more tariffs to the Chinese.
Oh, that'll do it. Yes.
He's definitely he's not afraid. Let's see. He has thrown so many gauntlets at people this last 2 weeks. He's got like an endless supply in the gauntlet thing. He's got a lot of those things.
Speaking of endless supply, we got a little bit of a choice ahead of us here for the end, Mr. Rockoff. So we have what our Eye of Sauron has found for us here for our final odd block name, or we could do a little bit of an audible. I'll leave it up to you, Mr. Rock Lobster. Our old buddy, the Flow Master, Mr. Schwartz from Trade Alert, looks like he was chiming in about some PAZ, our old friend PAZ, Pan American Silver Corp, aggressive call buying. So I'll leave it up to you, Mr. Rocklops. You want to talk what the Flow Master's got the bee in his bonnet for, the PAZ Silver calls, or you want to go Avon Products calls? Up to you, sir.
Well, Avon, it's a little. I have to say, I like the Flow Master. So if he's got a bee in his bonnet, let's hear what he's got.
All right, let's see what he's got all excited about. He was tweeting about this morning here. He's PAZ, of course. Pan American Silver Corp, ticker symbol PAAS. Trading today, 16.25, up about $1 or about nearly 7%, so a good run for them. Maybe on TWIFO a little bit later, probably going to be talking about some silver. There's been a lot of action in silver of late. Who knows? Maybe Uncle Mike actually did something this week. We'll have to find out. Mr. Flowmaster was chiming in this morning with what he termed aggressive call buying in Pan American Silver. Ahead of the earnings, he's coming into Showtime a little bit earlier today. The shares are up about 2.5%, then obviously up more now. He looked at the 20,000 of the SEP 18 calls going up in the first hour, all the way up from 23 cents up to 40 cents. So paper gobbling those bad boys up. Let's try it out. Let's put the good old PAZ in the Flowmaster's own system and see what it says. Let's fire up the old Trade Alert. Check it out, listeners. TradeAlert.com is the place to go to be alerted of the trades. Yeah, he is indeed correct. Go figure. The Flowmaster would know his own system. A lot of interest in there. Oh, I guess he's listening live. He's chiming in right now. He says he's loving the silver. 45,000 calls so far. So yeah, I guess Mr. Rock Lobster, we got some silver love here. SEP 18's going up, tons of them. Big block of 1,800 this morning, then 1,000, then 1,000. Total of 45,000. Wow. So I guess you chose well, Mr. Rock Lobster, because the Flowmaster's happy with you, and then you're a happy camper, right?
Well, you have to make the Flowmaster happy because he is the puppeteer. He gets very upset if you don't dance to his ministrations with the strings.
Speaking of ministrations, Mr. Uncle Mike, we don't get to bring you on the odd block too often, but there's a lot of action in silver right now. Have you had a chance to do anything? Have you been inclined to do anything this week with those epic mega 2-year silver calls? This is one of the I can't try to think of another week recently where I saw this much silver activity coming across our tape.
As a matter of fact, I have done some activity. So what I did with my silver, I have 2 silver collars going right now. I have one very passive one to where it's and I'm trading it in SLV to where I'm long the 12 put, short the 24 call. A couple of years out, actually. Another one, though, that I've been a little bit more active on, it was in about 3 years ago, in September of 2016, SLV was at 1830. And so at that one, I got into a collar along the lines of, I don't have the numbers in front of me, but it was like I bought the 18 put, sold the 20 call, and it was for a leap option. Of course, silver's gone straight down. But ultimately, what we were able to do is just continue to take profits on the way down, and then continue to take advantage of the reverse commodity skew that exists. And right now our position is we're going out to January, and we are in the 15.5, 16.5 collar, and our basis has been reduced to roughly like 1560 or 1570, around that level. And so this is one to where we've been dead wrong in silver the last couple of years, but we really haven't lost anything on it. And so the exciting part is that silver could easily, if we catch the right moves, if silver could go to, say, 1730 or something like that, we could still be up significantly when the underlying's actually gone down. And that's kind of the magic of what could happen in the world of options, and why they're so fun, and why it's important to, as I've heard a wise man say one time, do stuff. So yeah, I was able to re-ratchet up the collar recently, just with the up move.
I had a feeling you were doing some stuff there this week, because if you're not doing stuff this week, then when are you going to do stuff? Yeah, the Flowmaster, he's loving these calls. He said, what did he say? This guy knocking it out of the park. He said there were all small lots this paper, which is interesting. Has maybe. It's a lot of size for a newsletter, but the small lots makes you think newsletter. But he said all small lots starting at 30 cents, now all the way up to 60 cents. So this guy's looking good here on these calls. So yeah, maybe, here's what we'll do. If it gets the Flowmaster excited, we got to keep an eye on it. So we'll put this in our to be watched category as well for all this PAS call up, particularly the SEP 18s. That seems to be where a lot of the action is concentrated. And we'll come back to these bad boys, too, see how our friend is faring in silver. If you want to hear the futures options, we'll be talking about that in a little bit, listeners, on TWIFO. Now it's time. We got a little bit of time left. Let's go into a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the Mail Block. You guys have been on fire with the questions of late. Maybe fixing that website feedback form probably helped you guys. But you guys have been hitting us up on all platforms, left, right, and center. So keep those coming. We'd love to hear from you. Maybe we'll have to do another all questions palooza. You guys send in so many. There's so many. Let's start here. Let's go to Eddie. Eddie Matheny wants to know kind of the old question, but it kind of comes up a lot again this time of year around earnings season. Eddie wants to know, is selling options for a credit, and he puts in parentheses bull put, more profitable than buying options and paying a debit? And he puts in parentheses bull call. Thanks. So a very straightforward, seemingly obvious question, yet there's a lot of nuance therein. If we had our old friend Mr. Schlesinger on the show, I know which way he would be leaning. He would say options are for selling or not selling. So let that be your wisdom therein, Eddie. We here on the option block take a little bit more, shall we say, nuanced perspective. We like to buy and sell and go both ways. And so that's kind of where the interest comes because, of course, the old blush is that, selling options, it's attractive and it works. And it works until it doesn't, right? And that's when you have to have the plan. Whereas buying options is that death of 1,000 cuts. But when it hits crazy days like today, you're going to do all right. So you have to kind of be in the game for those to happen. So that's kind of where the nuance comes in of how you manage these. Let's go out to the hot seat first in Fidelity Land. Brian, I'm sure you get this type of question maybe every day. You probably get it a lot over there. I think I'd imagine it's a pretty common one. So what do you have to say for Eddie here, who wants to know, effectively, should he sell puts or buy calls? What's more profitable?
Well, the one thing I would mention is you're talking about spreads, right, at the end of the day. So either way, you're buying and selling an option in each of those. It's just tailoring it to what it is you're trying to achieve and thinking about what your outlook is on volatility as well, right? Because if you think volatility is going to drop substantially, well, yes, you can offset some of that by using a spread, but it's not going to completely offset that drop in the value of the option contract. So you may be looking at a selling strategy. On the other hand, if you're looking at a big increase in volatility, sure, you can offset some of it with a spread and doing a buying strategy. Excuse me, not offset some of it. You can use a buying strategy and sell an option to make it a little bit cheaper, but you're still doing a spread, right? That's the whole reason why they're called spreads. You're spreading off some of the option-centric risks. And either way, with a spread, you're buying one option and selling another option. That's sort of the point of it. So I think what you said at the very beginning pretty much nails it all, right? At the end of the day, it's more nuanced than just, hey, if I sell options, I can benefit from a directional move or no move, whereas if you buy options, you have to have some movement. And that's true when you look at it from a single leg, and that's really in theory land, but in the real world, yes, of course, you could benefit from two different directionals when you sell, doing nothing depending on where you sell the option, of course, but sell something out of the money, you can benefit from no movement as long as it stays out of the money. Whereas if you buy something out of the money, you definitely need movement. But that's sort of the point of why you might also use the spreads. So thinking about what your outlook is on direction, time, right? Even thinking about time, the spread's going to take a long time to get to max gain, and that may not be as attractive for what it is you're trying to take advantage of. So think about what your outlook is on time, direction, and volatility, and use all those pieces together to decide what's the right strategy for it.
Well said, sir. I like that you read in that you think he's using spreads. I hope so. He says pretty much he's selling options for a credit. I hope he's doing spreads. That would make me a little happier than if he's just doing this naked. But you never know. Mr. Rock Lobster, you get this question probably every day in the pit chat. What do you got to say here? What do you have to add here to what Brian just said? This is one of the times I have almost nothing to add to what he just said. You've rendered him speechless. Well done, Brian. I got to bring you on the show more often.
I have huge apologies, but I don't even know what to add on this. So I'm gonna pass it off to TOSAW.
Look at this, Uncle Mike, speechless, Mr. Rock Lobster. Anything you could add, sir?
It's sleepless in Seattle, speechless in Maine. Is that how it works?
It's unbelievable.
It is. I mean, the one thing that when looking at spreads, I think the way you need to have an understanding of it is the fact that ultimately you're just have a good understanding of how the synthetics work with it. When you're buying a call spread, it's the same thing essentially as selling a put spread. So I would just add, just make sure that you have a very good and deep understanding of how the synthetics of it work.
Well said, sir. Now it's time for us to have a deep understanding of what's coming up as we go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Let's give the Rock Lobster a chance to redeem himself. Mr. Rock Lobster, do you know what you're watching for around the rest of the week, sir, or is that something that the cat has caught your tongue as well?
The cat caught my tongue a couple things because sometimes I actually have to trade, so I had multiple issues going on at the same time as all kinds of stops and limits were getting run through. Not a bad problem, but I just had to deal with them. What am I watching? How far can we go down on the Trump tweet? Don't know. We've just had a 5-handle swing in the SPY. And the market not liking it too much. So in general, the market has hated these things for a while. So I think the economy is okay. Trump didn't get what he wanted for rates, so he does more tariffs so he can get more rates the next time. Make more rate cuts, I guess. I don't know, but all I can say is, oh my gosh, this is it's quite a thing.
It is quite a thing indeed there, sir. All right, I see now why you're not getting the music, sir. I think I fixed that, so hopefully you should be able to hear the music there. Mr. Uncle Mike, same question for you, sir. What's on your radar for the rest of the week?
Well, I'm additionally watching what we just had happen in the marketplace. I think 295 is kind of a key level in SPY as well as the 293 levels in terms of where some highs were put in, and we may be bouncing off of those. So this may be an opportunity in some way, shape, or form. I'm actually going to wait till the end of the day to make any decisions as to where I want to go with this, but definitely watching the markets after this rally right now. For those of you watching live, I'm sure you guys are watching the chart as well, but watching to see how close or how far we can go from the 3,000 mark with the SPX, watching Trump's Twitter account, and, of course, earnings. That's what's on my radar.
And bring us home, Mr. Brian, sir. What are you watching for the rest of this week, sir?
Well, I'm definitely going to be watching the the indexes, the charts. It's been interesting so far the past couple days. I think it's going to continue with tomorrow. We have the employment situation numbers coming out, so that could be some more interesting information coming out. So I'll be looking at that, and I'll be looking at consumer sentiment and factory orders, and hopefully I'll be looking at some cooler, less humid weather here in New England.
Careful what you wish for, sir, because that stuff comes back pretty quickly. Speaking as a born and bred New Englander, cold comes back with a vengeance. So enjoy the hotness while you got it over there, a.k.a. the heat. Mr. Rock Lobster, let's go back. Let's start with you as we hear it. Do you hear that music now, sir? Is that working for you? Can you hear that?
It is, and I found my mute button at the same time.
All
my
right.
gosh, what a day this
All the
became.
issues resolved. Mr. Rock Lobster not getting any music. That's what was throwing him off his game. We fixed it there. Mr. Rock Lobster, sir, that music means we're done. Unfortunately, what is cooking in the land of the pit?
What's cooking? All of our normal mentoring stuff. It's a little quiet here in August for us. However, remember, you can try my vol newsletter for free for a month if you want to learn how to trade vol. Why was I distracted? Because I got a ton of fills right now, which was great. However, but you can give it a try to learn it. Come on our optionpit.com and look for the vol newsletter.
There you go. Sign up for the vol newsletter. Tell them the Rock Lobster sent you for 8 cents off, and he'll give you some sort of discount. Hit him up. Tell him you heard about him on the show. Andrew at optionpit.com, and he'll get something set up for you. And Uncle Mike, if they want maybe a gift card to help finance such a purchase, where should they go? What should they do, sir?
Become a new client of mine. SaveCharlesWealth.com. Check out our website. If you're looking for a financial advisor that loves days like this and looks at them as opportunities instead of looking for excuses as to why the market goes down, why your mutual fund isn't paying you like you would like, give me a call. I'm my information. Nice.
There you go, listeners. StCharlesWealth.com is the place to go. Hit the man up. And then if you hit him up, you get a sweet gift card that you can turn around and go use to get some of those webinars, maybe the newsletter, whatever you want. Over there on Option Pit. We don't judge. $100. Go crazy. Go to town. Maybe you want to take it and cash it in for real world dollars and go buy some Skippy's, Gyros, and Lemonade. We won't hold it against you. Whatever floats your boat. StCharlesWealth.com is the place to go. And Mr. Brian, what is on the radar? And well, no, we just did that, but what is more importantly, folks want to come to Fidelity.com/options. What can they find? What can they do over there, sir?
Yeah, absolutely. They can go to Fidelity.com/options, take a look at all of Fidelity's options-related tools and some of the other educational opportunities that are available to you. And, of course, they can find some more information about my group, the Trading Strategy Desk, and how we can help. Of course, you can always call 1-800-343-3548 or 1-800-FIDELITY and ask to speak to the Trading Strategy Desk, and we'll be more than happy to help.
Check it out. Fidelity.com/options is the place to go. If you want to hit them up, if you are a Fidelity client, you can go to Fidelity.com/coaching and maybe hit up Brian or Trey or the Last Emperor or the rest of them over there directly. Ask them some questions, get some cool coaching and ideas over there as well. Fidelity clients. So you got to go to Fidelity.com/options first. Kick the tires over there. Then you can hit up the boys on the strategy desk and just bend their ear. Sell puts, buy calls. What do you want to do? Hit them up. They're there for you. And on behalf of Brian and the rest of the whole hot seat crew, and indeed Mr. Rock Lobster, who's figuring out how his machine works, and Uncle Mike, who's finally doing stuff in silver, and indeed myself, I thank all of you out there for downloading, streaming, and subscribing. If you are listening live, we will. Hopefully, you're hearing the music now. I'm not sure why you weren't before, so hopefully that sounds good for you. And then we'll be back in about 27 minutes. But in the meantime, we'll put some fun, maybe some Options Playbook Radio in there for you. You can hear some good episodes coming up for that one. So stay tuned for that. We'll be back in exactly 30 minutes. Talk a little bit of TWIFO. Otherwise, we'll see you back here tomorrow for Volatility Views.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at Fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.